It's Friday, May 19th, 2023. A lot to talk about today. Make sure to like this video. Make sure to subscribe to this channel. Hit that bell notification down below. Share all my videos. I want to get right into it today. I jotted down some notes, printed up some articles. I want to share this with all of you. Comment down below. The comment section is the best out there. The amount of knowledge that people have in this comment section is second to none. So please keep it coming because you're waking up a lot of people. But I want to start with this today. I've talked to numerous people in the last couple months that have told me this, and I want to ask you if you've had any experience with this. People coming to you and asking you for money. I've had a handful of people in the last 60 days tell me that friends have come to them for money, family members, employees have come to them for money. Have you had any experience with this? Are you dealing with this now, where a family member, friend, business associate coming to you asking you for money because they got to feed the kids, they can't make the rent, they need some extra money to make the rent or the car payment? So this is something that I'm hearing more and more of, and I'm asking all of you if you've had any experience with this. So please comment down below. Article today on CNBC, and this is all over the news. Republicans walk out of debt ceiling talks. So markets today across the board down, pretty flat, not down too much. You would think that we would have seen markets really hit today as the Republicans walked out of this meeting. But how is this going to end? Is there a chance that the U.S. defaults on its debt? I don't think so, but this doesn't give me a lot of confidence when we have members walking out of meetings. And they could have another meeting tomorrow over the weekend, but the clock is ticking. What do you think? Is there a chance that the U.S. could default on its debt? I still don't think it'll happen, but this is a little bit concerning, and we'll see how it all plays out. But you would think that markets would have been down a lot more today, because every time they would tell us that they're getting closer to a resolution, that they said that this could have all, the other day they said it could be wrapped up this weekend. Now we got people walking out of meetings, but every time there would be some positive news, the market would just go up 300 or 400 points. Now we get this negative news. Dow Jones only down 100 today. So we'll see how it all plays out. Here's one from The Hedge. Bank stocks puke as Yellen reportedly warns of more mergers. More mergers means more banks are in trouble and more banks are going under. And again, this didn't really have any big repercussions in the markets at all, but it did do something. Gold today up. And as we continue to hear more about these banking jitters, as Miss Janet Yellen is coming out telling us that we're going to see more consolidation of these banks or mergers, gold up. And I don't give financial advice, but as you know, I made a purchase last week. I did an unboxing yesterday. I don't care where you buy from, but I think you better have some gold and silver right now, because if you believe that the banking system is in trouble, if you believe that we're going to see severe competition to the world reserve currency, the US dollar, if you believe the economy is in shambles, then why don't you own some real money, some power money, some gold, some silver? Because in my opinion, from what I'm reading and the data I'm looking at and what Janet Yellen is saying, this banking crisis is far from over, ladies and gentlemen. And in fact, I think it's much worse than anybody wants to admit. Here's another one today. Foot Locker's 28% plunge. Yes, Foot Locker plunges 28% today. Guidance cut may signal trouble ahead for other retailers. Well, of course, because that discretionary spending is disappearing. Foot Locker, slow sales and theft. definitely cutting their bottom line. Consumer demand has softened. It's softening every day now. People are cutting back on buying, $200, $300, $400, $500 gym shoes. They don't have the stimmies. They don't have the free money. People are losing jobs. Real wages have been down for 24 months now. So when are people going to figure it out? There's still people out there saying that everything's fine. Don't listen to me. Don't believe me. And you know what? Please don't listen to me. Don't believe me. But go to CNBC, go to the Hedge, go to Bloomberg, go to the Wall Street Journal, go to a dozen other sites. Most of these are very, very mainstream. But you can go to these and you can do your own due diligence and do your own homework. But right here, Foot Locker is down 28% today. Do you think that reflects a booming economy or that a very strong consumer? No, absolutely not. People are cutting back. Now people are limiting their expenses to the essentials, and they're using credit cards to do that. Here's another one today. Disney World's costly Star Wars Galactic Star Cruiser to close in late September. The 2-day hotel experience is closing. The voyage costs $1,200 per day per person. Now you can get a family package for 2 days, a 2-day excursion for $6,000. I believe that's for a family of 4, $6,000. People have just been burning through money. And I wonder how many people who've done this excursion, dropping $6,000 for a family weekend, how much of this went on credit cards? How much of this was stimulus money? How much of this was unemployment benefits? How much of this was just draining their savings account? How many people could really afford to do this? And this is just lunacy, in my opinion, to spend $6,000 for a 2-day excursion at Disney World. Absolutely absurd. And people now have burned through so much cash. And I wonder how many of these people who did these weekend trips, and not to say that some of these people, $6,000 for a 2-day trip is a drop in the bucket. But I bet a majority of the people that did this, it was not a drop in the bucket. And I bet a majority of the people that did this, that spent this kind of money, probably have no gold, no silver, very little in cash savings, if any, probably no extra food or water put away, no preparations whatsoever. These people were living for today. And these are the people now who are getting themselves into very, very big trouble. And it's too late for so many people because they burned through so much cash, so much debt they've acquired now over the last 2 years, racking up, credit card debt on 12 of their credit cards. They've got rent, they've got a mortgage, they've got 2 car payments. They're never going to get out of debt. These are the debt slaves right here. And it's shocking how people can just burn through money like this and not see what is coming. The Hedge. Battered by inflation, 90 million Americans struggle paying bills as credit card usage spikes. On the Hedge today. So here's the reality. Consumers are facing financial hardship as they grapple with living costs, record high credit card use, 2 years of negative real wage growth. Millions of U.S. households today are financially fragile. And we're going to see this economy continue to erode and decay, and millions upon millions, like these 90 million people right here, are completely unprepared. They're broke. How do you prepare for a financial collapse when you're broke? The only advice I can give today is pray to God for a miracle, for direction, for protection, for guidance. That's about all you can do right now, because if you have no money, what can you do? I mean, this is why so many people don't realize they're going to be facing homelessness. So many people, they're going to be lucky if they can move back in with family members. And heaven forbid this government defaults on the debt. People are not going to eat. You're going to see absolute chaos unravel if that happens. 89.1 million American adults, that's 38.5% of the US adult population, were found to experience some form of difficulty in covering expenses between April 26th and May 8th. That is shocking. When was the last time we ever heard something like this right here in the United States? When you think about how many people are on food stamps and how many people cannot pay their expenses, 40 million households, 20 million households not able to pay their utility bills, 89.1 million American adults are having trouble to pay or cover expenses. This is the shocking reality of what's happening, ladies and gentlemen. Yet somebody ignorant will reach out and comment and say everything's fine. Don't believe me. Don't believe this guy right here reading the numbers to you right now today, fresh off the press. Don't believe me. It's impossible. There's nothing bad out there. Yet these people will never ever give you the data of where and how things are so good right now in this economy. I've asked these people, please, if you want to reach out, comment, and tell me that I'm lying and making this up, which I'm reading everything right off of CNBC, The Hedge, WolfStreet.com, Wall Street Journal. Where are you getting your data from, and where is the data? Because if things are so good, why don't you tell us where the economy is booming? Somebody said, well, you can get a job tomorrow. Well, yeah, you can get a job tomorrow. You can work at a hotel. You can work at a Dairy Queen. You can work at a McDonald's. You can work at an In-N-Out. You can work 22 hours a week, no benefits. Yeah, you can get a job tomorrow. You can get 3 jobs tomorrow. And most people should probably be doing that right now. But these are not high-paying jobs. These jobs don't have benefits. These jobs are not going to give you health insurance. They're not going to give you 40 hours a week. If you think you're going to live the American dream, drive a nice car, live in a nice neighborhood, buy a house working at Dairy Queen or In-N-Out, you are sadly mistaken. Get real. Stop being ignorant. Stop lying to yourself and lying to us. WolfStreet.com, home sales plunge. Supply rises. Price drop year over year. This on WolfStreet.com. And just to put something into relationship with that article, check that article out. It's very, very good. I'm not going to go too deep into that article because I'm going to just put something in relationship to that article. Somebody, a friend over at Chicago Title, sent me some very interesting statistics last night, and I want to share them with you. This is coming from the Southern California area, and some of this real estate is the hottest real estate, and it's always been some of the hottest real estate for decades. And I want to share with all of you what is happening in the housing market here in Southern California, near where I live and where I live, what's really happening. And it really justifies what this Wolf Street article says with home sales plunging, okay? It really reinforces this article. And I got this last night from Chicago Title. And just, I'm not going to go through the whole list, but it's 3 pages of cities here in Southern California. And just to give you an idea what's happening in sales. And remember, Southern California is some of the hottest real estate in the country. Indio, sales are down 36.5%. Now there's they have 2 different zip codes in Indio. The second one is down 41.07%. La Quinta, which is the next city over from where I'm making this video, sales are down 45.25% from last year. Menifee has been a booming area in Southern California. 2 different zip codes in Menifee. One of them is down 33.39%. The other one is down 48.84% year over year. Murrieta, another boom town. These are huge areas where huge developments have been built over the last few years. Murrieta, two zip codes in Murrieta. One down 39.66%, the other one down 40.83%. This from Chicago Title, ladies and gentlemen. Very, very big title company. Palm Desert, where I'm sitting right here today, we have 2 different zip codes here. in Palm Desert. One is down 27%. The other one is down 32.8%. Palm Springs, two zip codes. You've got north and south. Looks like the north end here is down 40%. The south end is down 35.78%. Rancho Mirage, one town over from me where I'm making this video right now, is down 44.4% year over year. The city of Riverside, you're looking at parts of Riverside that are down 51.69%, 38%, 39%, 33%. These are all different areas of Riverside, but 51.69%. That is unbelievable. San Jacinto, right out there by Hemet. If you remember back in 08, it was right around that time where 60 Minutes went out there and did a special with a housing crash. That was out there in the Hemet San Jacinto area. Well, look where we're at now, right back in that area. Year over year, sales are down 41.7%. Temecula, a boom town, down 44.19%. Unbelievable. So that comes from Chicago Title. That was sent to me by a friend last night. The real estate agents have got to be getting absolutely destroyed right now. If you're selling real estate out here in the desert, you've got to be getting absolutely destroyed right now. It's absolutely, these are absolutely astonishing numbers. So anybody telling you and I that things are okay, they're sadly mistaken. And we can look outside of Southern California. Boise, Idaho is down 15.4% in just 1 month. Austin, Texas, down 13.7%. Sacramento, this is in the last month. Sacramento down 11.9%. San Jose down 10.5%. Oakland down 9.7%. That's huge. And if we go out to Orange County, right here in California, Orange County, California, some very, very wealthy real estate out there. Also, Orange County did go bankrupt after the last housing crisis. Sales have been absolutely demolished. And in the Orange County Register, home prices fell in 61% of all of Orange County. 61% of the cities in Orange County, prices have fallen. So that means billions of dollars in home equity has been absolutely evaporated in an area like Orange County. In March, roughly 55,000 home purchase agreements were canceled. That's not a very, very good sign. That's 14.8% of all homes that were under contract canceled. So we're going to see banks struggle. We're going to see labor markets weaken. Inflation is going to stay very, very sticky. Mortgage rates are going to climb. And we're going to watch the amount of qualified buyers evaporate. So, and we're going to see more inventory coming on the housing market throughout the country. And when you see what's happening in Orange County and sales plunging there, prices in 61% of the cities in Orange County have fallen. This is just the beginning. And I use Southern California as a barometer because typically this is some of the hottest real estate in all of America. And when it begins to go, you begin to see the rest of it in America go with it. But you look at Austin, Texas, Boise, Idaho, this is all just reinforcing what all of you have been saying, what I've been saying. Huge cracks in the real estate market. And we are going to watch the dam break in this market, and it is going to take everything down with it. These real estate agents, anybody in the mortgage business, anybody associated in the real estate business, I hope you saved money because we are going to watch the real estate market collapse. And it is not going to recover for many, many, many years. And again, anybody out here in the desert, Riverside County, selling real estate, I I'm sure that a lot of them are probably, you know, Uber drivers and Lyft drivers and doing whatever they can right now, taking on multiple side hustles, because most real estate agents right now are not selling homes. If they are, they're selling a lot fewer homes than they were a year ago, and they're going to continue to sell a lot fewer homes because this thing is going to continue to slow down to a dead halt. A lot of people out there think that this can't happen, that there'll be no repeat of 2008, what happened in housing, because, well, the banks were more responsible this time. Here's the problem. There are still a lot of people that bought homes with very, very little money down. And the bigger problem is going to be jobs. If people don't have jobs, you cannot support, nor can you have a healthy real estate market. It is absolutely impossible. If incomes are not keeping up with prices, prices must fall. Things are going to really slow down here. You cannot have people making $50,000 a year buying $500,000 houses. It just is unsustainable. And we're not seeing incomes keeping up with the price of housing. So something is going to give here. And all it takes is somebody missing a paycheck or 2 paychecks or 3 paychecks, and they're behind on a house payment. A spouse loses a job, they're behind on a house payment. It's that easy. It's that easy. And people are paycheck to paycheck. Most people don't have any money saved up. 42% of this country doesn't even have $400 saved up. So if you lose a job or lose a paycheck, how are you going to make that mortgage payment? Your car just got repoed. How are you going to get to work in order to make money to pay for the house when you can't even pay for the car? 15,000 repos a day. Come on. I mean, it doesn't take a rocket scientist to figure out what's going on here. This whole thing is on borrowed time, and anybody out there that doesn't see this and believes everything is okay, you're very ignorant, in my opinion, or you need psychological help, one or the other, or you just are in such denial that you do need help. And I feel sorry for you. And this isn't to judge anybody. This isn't to come down on you, but you have to be an ignorant person not to see what is unfolding here economically. And if you can't see it because you're ignorant, well, you're probably going to lose a lot if you have anything to lose right now. A lot of people seem to have all the answers, but they're living in mom's basement and they have $23 in their bank account. So I don't know if their opinion really matters. I feel sorry for the people who keep listening to everybody on TV who are actually investing in these markets or think this is a good time to buy real estate. They're being completely misled, like sheep to the slaughter. You got to think for yourself, ladies and gentlemen. You got to do your own homework. You got to do your due diligence. Stop listening to other people. Don't listen to me. Start doing your homework. And I think that most people in America right now, in the latest survey, I think about 70 some odd percent say this is not a good time to buy a home. So I think most people understand that. But it doesn't matter that the banks have been more responsible. What does matter is jobs. And if people are not working, if they don't have real jobs, that doesn't mean, you know, working at the Dairy Queen or Burger King, real jobs with opportunity, with benefits, real wages, 40 plus hours a week. If we don't have those type of jobs, you cannot expect to have a strong real estate market where people are working service sector jobs. It's just not going to happen. It's absolutely impossible. And so now we've had this massive bubble that's been produced by the Fed, buying mortgage-backed securities, slamming rates, people buying homes at 2.65%, and people just going, well, yeah, the house is $800,000 a year, but it's only 2.65%, so I can make the payment. And so now we've created this massive bubble because people could make the payment. So now it's so difficult for so many other people to buy a home. So I don't know when this is going to come to an end, ladies and gentlemen. This thing it should have crashed a long time ago, and they've used so many tricks. And you know, the Fed, you know, in here buying mortgage-backed securities and slamming rates and keeping rates low and pumping all this money into the market has created multiple bubbles. And now, you know, certain people cannot even move because they're going to go from, you know, 3% less or less mortgage to having to take on a 7 or 8% mortgage now. So it's impossible for them to sell and move. But at some point, a lot of people are going to be forced to sell. And when they do, it's not going to matter what the mortgage rates are, because people aren't going to be able to afford to keep their homes. and there's going to be fewer and fewer people that are going to be able to qualify to buy a home. So you're going to have more and more homes flooding the market with less and less qualified buyers. And don't forget how many people, their credit's being destroyed now because they are not keeping up with their utility payments or their house or rent or their car payments, and their credit's being destroyed right now. And so they're not going to be able to buy a house for many, many, many years, maybe never again. This is all changing very quickly, ladies and gentlemen. So, this is why I say, don't go out blowing your money, wasting your money, buying $8 lattes when you should be buying things like assets, tangible hard assets, like having some gold, silver, having some cash put away, getting your debts paid off. You want to be as debt-free as you can be heading into this collapse, period. So as I leave you this weekend, have a great weekend. Make sure that you continue to prepare. I know a lot of people this weekend will just say, hey, everything's going to be okay. That's what the television tells me. So let's go out to dinner. Let's go to Vegas. Let's go gamble. Let's go run up the credit cards. Those people are going to lose, ladies and gentlemen. Right now, it is about being defensive. It's about being in control. It's about exercising patience. It's about having a game plan. So make sure you really think about where you're going and how you're protecting your money and who's managing your money. We rely on so many other people to do this for us when we should be doing it ourselves. We should know where our money is, what it's invested in, who's holding it. And people they trust other people with their money. And again, look at how many people got wiped out in 2008. And how many people couldn't even access their money when they needed it because it was locked up somewhere else. If you don't hold it, you don't own it. I think this is going to be one of the most important periods in history where you must be holding money, you must be holding assets, and you have to be responsible for you, mentally, physically, spiritually, and financially. Have a great weekend. Make sure to keep adding to those preparations, get in better shape, be walking close to God, and we'll talk very, very, very soon.